Hi everyone and welcome to the weekly update with me, Richard Perry. And over the weekend, the elections in Greece. Now, the left-wing Syriza party, which has come to power on an anti-austerity ticket, has won the election, and that sort of now brings into question what Greece is going to be doing going forward, because they're certainly going to try and renegotiate on the €240 billion bailout package that Greece has got to pay back. And immediately, actually, we've got €7 billion worth of debt that need to be repaid in February. So it'll be very interesting to see how the market reacts to that. There's no major reaction yet to the market. It was a slight dip in the stock market at the open, but that's rebounded and the DAX is actually higher now. So very interesting reaction that we've had. So it depends on how this plays out in the negotiations over the government, and then the negotiations with the ECB and etc. over the debt repayments. So it's one that's going to have legs in it, and I think it's something that's going to continue to be in the back of traders' minds for the coming months. So what have we got this week? Well, the majority of this week is actually based around the US, really, with the key announcements, and certainly the Fed is the major announcement with the FOMC monetary policy that's on Wednesday. And certainly in light of the fact that central banks around the world seem to be moving to a bit of a more of a dovish stance than previously thought, the opinions of the Fed on Wednesday will be very keenly watched, because the Fed is theoretically on its path towards tightening. So a big divergence there in monetary policy in terms of key central banks. So how the Fed views the economy in the US will also be a big factor this week, so it could impact on market sentiment. We've also got GDP at the end of the week as well, so first look at Q4 for the States. But also we have got the midst of earnings season in the States, which is beginning to really ramp up now. We've got 150 companies in the States reporting this week, and a big focus on some of the tech giants such as Apple coming through with their results. So lots of US centric data and announcements to drive these markets. Okay, so where are the Forex markets looking? Well, certainly the dollar index has had a strong run up higher, and that was driven again by the ECB announcement on Thursday. That drove the euro lower. Significant gains seen on the dollar index, really accelerating away to the upside. That's now an 11-year high, and certainly that dollar index looks strong at the moment. For the euro itself, it continues to remain incredibly weak on both short, medium and long-term signals. There's a very slight potential for a technical rally coming through on the euro, as the euro's just found a little bit of support on Monday morning, but there's a lot more work that needs to be done for that. And even then, if there were to be a bounce, then I think that would be pounced upon pretty quickly and used as a chance to sell. In terms of cable was dragged lower on Thursday by this euro breakdown, and certainly the support on cable at $1.5030 was actually a key floor that got broken, and I think that now just reopens that key July 2013 low of $1.4810. I think that that has been on the cards for a while, but I just think that every so often cables goes through a little bit of consolidation and then loses the floor and then starts to travel back downwards again. So I think any sort of rebounds on cable are still a chance to sell. Dollar yen's an interesting one, because dollar yen's been trading sideways now for a few weeks, and even in the last week, this consolidation that we've seen has meant that trading range has been only about 170 pips, which for dollar yen in the last few months has been a very tight range. Just shows that there's a big battle going on for supremacy. There's no real overall control. Technical indicators are pretty much neutral on both daily and intraday charts. So there's something that needs to now be the catalyst to break the dollar out, or strengthen the yen and pull the dollar yen lower. So it's still to be decided on that one. So on to indices. Well, the stock market indices, such as Wall Street, have certainly been sort of pulled around a little bit by the earnings season and also the oil price. But what we've seen is the Eurozone markets being driven significantly by this ECB quantitative easing story, and that has certainly driven the DAX higher through to all-time highs, and a big breakout. FTSE continues to underperform. That has been dragged by the oil price, but in the past week or so there's been a big rally as the oil price has started to find a bit of support. Now again, I think that the oil price will continue to drive the FTSE because there's such a large weighting in the oil majors, and I think that FTSE will continue to underperform if that oil price is still under pressure. So the S&P 500 still looking out for I think a positive outlook. I think that it has been a bit choppy recently, but I think that the bulls will be looking towards the 2094 all-time high for a retest. In terms of the DAX, as I said, we had that breakout to an all-time high. That actually gave us an upside target of 10,957. And as I said, FTSE still a bit of a laggard, still struggling to really break out on a long-term basis, and it's still underneath that key resistance at 6,905. RSI back up towards the mid-60s. Again, this is where the rallies tend to fall over on FTSE, so just bear that in mind on that chart. Okay, finally with gold, where are we looking at? Well, we've got the gold chart, which has significantly rallied in the last couple of weeks, 3 weeks. 10% higher on gold chart, and a strong rally that has broken through some key resistance levels through the 1255 key October high, which had been holding the gold price back for a while, and that sort of now has turned the outlook round. The medium to longer term outlook is beginning to improve. The medium term outlook is certainly improved, and it looks like, although very near term struggling around the $1,300 mark, maybe there's an element of profit taking that might come in, but I think that 1255 support, that old resistance becomes new support, and I think that would be giving you a chance to buy around those sort of levels if you've got a pullback. So a lot going on in this gold chart still. So through the rest of the week, we've got, as I said, big focus on, in terms of the economic calendar, big focus on the US for a lot of the data, but we start off on Tuesday with the UK with GDP. Now GDP in the UK and growth has certainly been fairly positive. The UK still one of the better performing economies around the world, and it's an expectation of a slight cutback in growth back to 0.6%, but still a decent number that would be. Now stateside, we're still looking out for durable goods, we're looking out for consumer confidence and also new home sales, so a lot there to sort of second tier data, but still important stuff that will be driving markets. Then on Wednesday we've got a couple of monetary policy announcements. As I said, we've got the Fed on Wednesday, but also we've got the Reserve Bank of New Zealand, which will be an interesting update considering it comes on after the Bank of Canada recently cut interest rates. So what will the Bank of New Zealand do? And also then on to Thursday, we've got the German flash CPI data. That could be a harbinger for the Eurozone flash CPI data that comes out on Friday. And then we close the week off with the US growth data. So lots to go on this week, and I wish you good luck throughout your trading.